All right, Doug.
Hello, Sean.
Hey, we're here today talking. We were just talking about. You were talking to me about assessments and taxes on properties, which a lot of people don't know about, but you have seen this happen. You want to explain to me
Sure,
what we need to watch out for here?
you bet. Maybe I could just explain a little bit about how the process works for the collection of um, municipality cities.
Okay,
How
better,
they.
Doug.
Mhm.
Could you start with an example of where a buyer gets stuck with more taxes
Sure,
than maybe they had thought they would be paying at closing?
sure. Okay, so
Start with that.
especially this time of the year, we're going into December. Let's say you buy a house and you're going to close at the end of January. So what happens is normally in the purchase agreement, you negotiate with the seller that the real estate taxes for the year, in this case would be 2011, are going to be prorated. So if you close at the end of the January, the seller will pay January's taxes, then you're liable to pay all the rest of the 2011 taxes, and that's standard. Everybody knows how that works. That's called proration.
Okay.
The little bit of a twist on that, though, is that if the real estate taxes include a portion of those real estate taxes include a collection for the city assessments. So that an example would be real estate taxes are $2,000. $500 though is city assessments. So the total tax bill for 2011 will be 2,500.
What would be the city assessment? Give an example there.
Would be, let's say they repaired or replaced the street, city, and or city water and sewer in front of your
Okay.
house.
Okay.
Okay, and the city said that's okay. You don't have to pay it all up front. We'll assess it to your property over 10 years.
Okay.
So this year it's going to be $500 going to be assessed to your property. They collect it through the real estate taxes. Well, if you close in January and you said prorating taxes, that's what it means, the real estate taxes. So in my example, $2,000 is the real estate taxes. So those are going to be prorated. The seller will pay 1/12, and you'll pay 11/12 for the
Okay.
rest of the year.
Okay.
What should happen then at closing is that $500 that was included with the real estate taxes, the total bill was $2,500. $2,000 was real estate taxes, $500 was city assessments.
Okay.
What should happen is that at the closing, the seller pays 1/11, 1/12, excuse me, of the real estate taxes, 2,000, and all of the city assessments, which is 500, plus whatever balance is left back at the city against that property.
Okay.
So you have to be careful this time of year because you want to make sure that when you get to closing, that is what happens. Some people, there's a lot of numbers and it gets confusing. But what happens is a lot of people just say, okay, well, I got the seller paid for 1/12 of the real estate taxes. I'm paying for 11/12. But actuality, they use the 2,500 number in my example and not 2,000. So you got to be careful there because you want to make sure the seller pays their portion that was agreed upon in the purchase agreement.
Okay.
So,
And again, the city has the right to do that because the state allows that.
yeah, in actuality, how it works is when the work is all finished out in front of your house, the city then levies an assessment against your property. So let's say $10,000.
Okay.
And so now the city says you owe them $10,000, but the plan is that they're going to let that be paid in 10 installments over 10 years.
Okay.
And so at the end of the year, they take whatever portion of that bill that's left at the city, and they take a portion of that, they send it to the county to be collected with the real estate taxes. So when you get your real estate tax statement, it'll show taxes for the city, taxes for the county, taxes for the school district. Oh, and then, by the way, a city assessment is being collected along with these real estate taxes.
Any type of special levies or assessments will show up as a separate item. That's outside of the operating
Right,
budget and
right.
stuff.
And so that's where you want to be sure at a closing that separate portion for the city assessments is being collected in total
Okay.
and paid by the seller. Even though it shows up on the tax statement, it's really not a real estate tax, it's an assessment.
Okay, so just kind of a gray area there.
A little bit, and if it's not, some properties don't have any assessments, so it's a moot point. But on the properties that do, in fact, we just have one where the buyer's buying one from a bank, and I'll tell you, the bank they're not gonna be really concerned. They're going to try to do the 1/12 of the
whole
whole
amount.
taxes and have the buyer try to pick up the rest of it. And so no, we're going to,
But they have to, buyer and seller have to agree on that. I mean, if
yeah, it's in the
a-
purchase agreement.
If it's an improvement to the property and there's still some years left on that assessment, then you actually benefit from that assessment as well.
Yeah. Right.
So,
right. You're benefiting from, but it's all been negotiated up front. So what you just want to make sure is that it's carried through closing. What you agreed upon, whatever you agreed upon in the purchase agreement is carried
it
through.
could be $500 or $1,000 extra dollars you're paying
Yeah.
in city assessments that really maybe potentially the seller had racked up that bill mostly.
Yeah.
And actually the seller should be paying that, not the buyer.
Right, and in fact, on foreclosure properties that banks own, sometimes the city does do that. Let's say the former owner never paid their water bill, and they owe a water bill and sewer bill, and they owed the city $1,200. Well, the city has the right at the end of the year to send that in for collection along with the real estate taxes.
Right.
And so those aren't taxes. I mean, so you want to make sure that if there is a water, so here's a point, here's an extra little thing. Make sure that you or your real estate agent check with the city when you're dealing with foreclosure properties. Check with the city and see what that water and sewer bill is. Is it
Or
behind delinquent?
Any outstanding bills if they can check. Yeah.
If they could check with if they're any delinquent, and if they've certified any of those delinquencies into the next year's taxes, well, then you want to make sure that the bank takes care of that at closing.
Right. Okay.
Yeah.
Well, good. Thanks, Doug. Good advice. Hopefully
Okay.
you save some people some money.
Good.
Thanks.
Mm-hmm.